Hello, this is Steve Malone with Compass Effects. Hope you're doing well today and again some good trades. Hidden inside every chart is a story about where the price has been and where it might go in the future. Some stories are obvious while some are more difficult to figure out. Stories within the chart are told by a pattern of repeated formation of price movement. We call these chart patterns. And as the story of each chart pattern unfolds, there lies within each chart pattern a secret as to where it is going with a high amount of probability. So in this video and some continuous videos, I'm going to do a series on the secret of chart patterns. So let's discuss in more detail what the secret of chart patterns is. The secret of chart patterns is simply known as a measured move. A measured move is a calculated distance of two or more points in a chart. The measured move is applied as a profit target as price breaks out of a pattern. And proficient traders can often determine a logical profit target by calculating a measured movement of a chart pattern. Now there are several chart patterns, and what I'm going to do in a series of videos is I'm going to go through a number of these patterns to share with you how you can determine where the market's going to go based upon the price pattern that's shown. Now remember this, price patterns have a tendency to complete themselves over 65% of the time, sometimes as much as 85% of the time. So in worst case scenario, if chart patterns only complete themselves 65% of the time, and you can identify the measured movement as well as have the proper money management, you can definitely be ahead of the game when most traders are trying to figure out where the market's going. So let's take a look at one of these chart patterns. I'm going to look at the first one here, the trading range breakout. A trading range breakout is often considered a continuation pattern. That means the market has moved up to a range, is kind of bouncing around, tightening down, but more times than not, it'll break and continue the overall trend unless that overall trend is overextended. And here's what we're looking for. We're looking for price to fluctuate up and down between two horizontal trend lines, creating a rectangular shape. Now here's even more important. Between those two horizontal trend lines, we're looking for a range that is literally no more than about 40 pips. The tighter the range, the greater chance of a breakout. And the measured move is the height of the range. So give me an example here. We have the market that's moved up from here up, and now it's bouncing back and forth in this range. Identify the resistance of the range, identify the support of the range, then measure the difference between resistance and support. And what we're looking to do is, as the market breaks out one way or the other, and typically it's a continuation, in this case a long breakout because the market already started making a move up, it went flat, now it's making another move up. What we're looking for the market to do is to break out of this range, and we're simply going to take the measured move and set this distance on top of resistance. So as the market breaks out, our target, we've already identified our target before it actually reached that area, and literally you can identify the target before even a break of the range. Let me give an example of what it looks like in the synergy model. You can see here that the market moved up based upon the synergy model. We find ourselves, when the market settled down, we find ourselves in about a 20 pip range from about 52.85 to about 153.05. Then the market breaks the upside here. We take the measured move, we sit it on top. Now as the market continues making a move, and notice that the first candle made the move up right to that level that we already calculated. Then the market continued making another move up. So what you can do is take the measured movement, you set it outside. If the market continues making in that direction, then you simply stack your measured move. So in this case we hit target number 1, which was the measured move. Target number 2 is literally the second measured move stacked upon the first measured move. Now, determining a stop loss sometimes can be difficult, but with a measured move, you simply reverse the measured move to determine your initial stop loss. So in this case, the market broke up. You turn the measured move in the opposite direction. In this case, it's pretty easy because it's just the other side of the range. You set your initial stop loss somewhere right below the bottom of the range. And again, that's the initial stop loss. Let's take a look at the short breakout. The short breakout is just the opposite. We have a trend coming to the downside. The market goes flat into a tight little range. We take the measurement from top to bottom. When we get a break of support, then we simply take that measured move, set it below, and we identify the initial target that we're looking for the market to go to. Let's take a look at what it looks like in Synergy. So here the market in a tight little range, up and down. We take this measurement. Once the market finally breaks out below the lows back over here, we take that measured move, move it below. From our entry point down, this is the initial target that we're looking for the market to go to. And then on the break of the range, we reverse the measured movement and place our initial stop loss up around this area right here. Sometimes just right beyond the range is the best place to put your initial stop loss. Well, folks, this is just the beginning of a series of videos. I'm going to be talking about the secret of a chart pattern. Again, that secret of a chart pattern is the measured move. So today we've talked about the trading range breakout. In more of these videos, I'm going to again discuss each chart pattern, the story it's trying to tell. We're going to identify the measured move. We're going to calculate with that measured move where the potential target will be in the marketplace. It's my hope in this video series that you will understand the importance of chart patterns. Chart patterns is one of the primary ways that I trade every day in my live active trade room. The chart patterns don't always work out, but when they work out, more times than not, using proper money management and having identified that secret of the chart pattern, the measured move, you have a greater potential in reaching that trading outcome that you want. Well, folks, Dean Malone with Compass FX. Hope some of the information I've shared with you about the measured move and about this particular chart pattern will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.